Hi everyone and welcome. It's Wednesday, 6th of April. So today we're gonna have something that basically it's on the interest of uh, price action traders. So I'm referring of course to the traders that they don't use any indicators at all. So they are solely focusing on the actual candlesticks, on the actual price movement only as their main indicator. So before we officially start, I need to go through the disclaimer warning as usual. But before I do that, actually, before I do that, I would like, as usual, to give me feedback in regards to the audio and whether you can see the slides. You have also downloaded the PDF format as well, and etc. The usual confirmation that I'm asking from you in order to make sure that everyone is in line with me. So webinars@hotforex.com is our email address. So until I have a quick feedback from you in regards to the audio, I will read out loud the disclaimer warning. Okay, so next. This material provides a general marketing communication for information and purposes only and does not constitute an independent investment research. Nothing in this communication contains should be considered to contain an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. So risk warning. Sorry, I had to mute myself for a second. So risk warning, trading leveraged products such as Forex derivatives may not be suitable for all investors as they carry a high risk of your capital. Sorry for that, and maybe I need to share the event link to my colleague so he can participate as well. So please ensure that you will fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. You can find our risk disclosure and all the documentation that you might need either on my HF area, which is the client area, but in the main website. So feel free to visit our website and to find out anything you need. So we're ready to move on. Guys, I didn't have the feedback from you in regards to the audio. Just a quick yes or a no, it would be brilliant, just to make sure that everyone can hear me and you don't face any issues. Just a quick, thank you very much. Thank you. Thank you. So, okay. So, what we're gonna cover today. So we're gonna, thank you very much, guys. Thank you, Dave, thank you, Kinel, thank you for the feedback. So, do you or would you actually like to try trade without any indicators on your chart? So this is the webinar for you guys. It sounds a bit scary, right? But it's not. It's not actually, because the candlesticks, the actual price, gives us a lot of information, and give us support, give us resistance, it gives us reversal signals, it gives us momentum. So whether the momentum is strong, whether the momentum is weak. So, and this is something that we can observe just solely from the candlesticks. Okay, so today I'm going to demonstrate how you can trade without an indicators actually being a price action trader. There are many people like that, that they prefer trading based on the price action solely. So why not trying yourself as well, maybe in a demo account initially, and if you like it, fair enough. If not, just continue on what you like the most and what you find easier, and what you find and it's easier to understand. I mean, on spot, it's up to you. Each one of us is different anyway. So this is what we're gonna see today: support, resistance. I mean, using price action, of course, how you can use the price action analysis to enter the market, and where you should identify, how you should identify your stop loss and your target. So I'm gonna start a bit with some intro, a bit of theory, what price action is, even though I have already mentioned what price action is, before we move on to the examples and etc. So price action, as I already mentioned, is simply another term for the movement of an asset. Okay, price action, it implies to price movement. Okay, so price action trading, is a strategy that is neither technical analysis, neither fundamental analysis, but purely with the price movement. So rather than so actually price action traders, which there are a lot of price action traders, and some long-term ones actually. So they observe the price movement as their sole technical indicator, and they place their trades based on their individual decision making. Okay, so anyway, if you ask yourself who are bulls, who are bears, it is us. So who are bulls and bears? It is us. Okay, it is just us, the participants in the market, the retail investors, the institutional investors, banks, hedge funds, people that trade billions, etc. It's all of us. Okay, but who is having the biggest impact in the market? That's not us. Okay, we're not even the 10% of the money that they are getting into the market every day. The ones that they have the biggest impact, they are the people and the banks and the institutional players that they invest billions. Okay, so that's why. That's also the reason why there are a lot of traders, either long-term or short-term, that they exclusively rely on price action to make trading decisions, because the price action simply reflects the impact of what I just mentioned of the majority of the market. So let's not forget that technical analysis is a derivative of price action, right? Any technical indicator that we use takes values. It's a derivative of price action, right? The majority, if not all of the technical indicators, are using past prices in their calculations that can then be used to inform trading decisions, right? So price action can be seen and interpreted using simply charts and so it's the same, not, it shouldn't be, it's not the same thing, but what I'm trying to say is that indicators are using the price action in order to give us some signal. So why not trying to just observe the price action as by ourselves without any interference from technical indicators? Even though I should be honest with you, I like indicators. I feel more confident when I have indicators, but that's just my preference, because I'm not a price action trader, right? It's up on the personality of each one of us. It doesn't matter. It's up to you, actually, basically. whatever suits your personality. Me at Andria, I try to do price action. I do price action, but I always try to check a bit of my indicators because I feel more confident on my decision once I also make once I observe my indicators and I make sure that indeed what I understood and what I decided it relies with the indicators as well. But as I said, this is up on your personality, your what is best for you. So price action, as I mentioned, can be seen and interpreted using simply the charts, the candlesticks, and by observing the price over the time. So the only thing you need is to identify from this close observation and careful observation of the candlesticks, is to identify using this the support and resistance levels. So that's why preferably when we are discussing about price action, we use candlestick charts, not line charts, not pipe charts, sorry, not the line charts, but candlestick charts. Because candlestick, the Japanese candlestick, they can help us to visualize better the price movement because it displays, as you already know, the open price, the high price, the low price, the close price. And with the coloring, the different coloring that there is, you can, without really closely observe, you can see by the colors when you have a down day or an up day, when you have a bullish day or a bearish day, or a bullish hour or a bearish hour, and so on and so forth. Okay, that's why candlestick patterns, candlestick charts are ideal for price action trading. And don't forget, for those that they have been they have attended to our webinars before, don't forget that we have seen together in past webinars some candlestick patterns, right? So these are useful for price action trading. So we have seen Harami, we have seen equilibrium pattern, we have seen evening star, morning star, etc. So yeah, this is called price action, by identifying patterns as well. So the aim is to find an order in the sometimes seemingly random movement of prices. So it's time to move on, right? So here we are. We have discussed what price action is. So here is pretty much a repetition. I'm not gonna go through it. From this slide, the only thing that I would like to highlight is that even though you should have in mind, guys, that technical analysis and fundamental analysis aren't especially useful in the cases that we have very short-term time frame. So actually it depends, but if you are trading in a very fast environment, and I'm not referring to 30-minute chart, I'm referring to a minute. Okay, sometimes the technical analysis, fundamental analysis is not possible in a minute chart or in 3 minutes chart, but sometimes neither the technical analysis, because you are in a very fast environment. So in these cases, price action could be more appropriate, okay, in order to identify clues into supply and demand balances. Okay, so as I mentioned, price action trading involves placing trades exclusively based on the price action rather than any fundamental technical analysis. Sorry. And that's because the identification of the trade condition
is based on the established criteria, analysis criteria. So the decision to buy, the decision to sell or hold a position. So these decisions, the decision to buy or the decision to sell or to hold are subjective. Okay. So examples of price action trading. By observing the price action, we can actually see, you might have not noticed it, but we can other than the body of the candle, the tail of the candle, and etc., the open, the high, the open price, the low price, the close price, and etc., we have also other hints. So the swings, for example, okay, it's also a price action characteristic. Is something that it gives us information about the potential movement of the price. Also, support and resistance level breakouts or consolidation areas are also some example of price actions, and we're gonna see this in practice. Okay, so here we are. Okay, so let's make sure that you understand. By the way, you can interrupt me anytime. You can ask anything you want. I will be here to reply. Okay, so firstly, let's make sure that you are okay. Well, you have understood the concept, the price action concept. Okay, because sorry, just a second. In order to just make sure that you are okay with the concept, with the price action trading concept, as I said. So, okay, so let's first clarify something that you already know. We have discussed that price action relies on the balance between supply and demand. So that implies that there are two parties obviously in the market, right? That's something that you already know. We have buyers and sellers. So in every trade that is occurred, every trade that we place, every trade that occurs, the trade actually is possible only when you have two parties. Okay, in order to have a buyer, you need to have a seller, right? So in order for you to be able to place a trade, you have the need of the opposite party. Okay, right? Every trade needs two different parties, the buyer and the seller. So two different views, one that is buying, the other one that is selling the same exact asset. Okay, that's in the theory. I mean, in theory, the buyer and the seller have access to all the same information about an asset, to the same data from the news, the same technical indicators, the same fundamental analysis, etc. But despite all this, they came to opposite conclusions. So why does this happen? This is happening because each trader individually has different judgments, right? And each one of us is thinking differently, in a different way. So that leads to trading with opposite views. Okay, that's why even though we have access to the same information, we have opposite views. So, and here I have an example over here. Okay, so we have three indicators, right? We have the 20 period, the 5 period, and the 10 period one. Okay, and even though we have this bullish cross over here of these two indicators, okay, which is a bullish signal. For others, there were others that actually were selling the asset, even though that moment looks to be a bullish signal. So buyers may base their decision on the standard recommendation of these moving average crossovers. But sellers on the other side may have taken a contrarian view that the standard recommendation to buy on crossover will lead to an overbought situation, and hence it is better to sell. So you see two opposite views. So so we have covered this, sorry. So how does, actually, before we move on to the actual example over here, just a minute to stick on these 2 bullet points over here, something that I missed to mention. So how does price action trading works? So these are the 2 basic fundamental steps for to be able to, for applying price action trading. The very first thing that you need to observe is to observe the trade condition. To identify trade condition, you need to observe whether the asset is trending, ranging, which direction, observe a bit the candles, their tails. So the general condition, okay? Before, and the next step obviously is to take a trade position based on this, on your own thoughts on this observation that we have done, which anyway is subjective. But let's have a look over here. So how to spot trades? As I mentioned, the very first thing that you need to do is actually to observe, to identify the trade conditions. David, there are no indicators. This is a price action trading, price action webinar. Okay. Yeah. So as I was saying, the very first thing that you need to observe is the overall trade conditions. Okay, regardless of the time frame, regardless of the asset. If you are a fan, let's say, of a 5-minute chart, okay, observe your 5-minute chart. Observe the trade conditions that they are currently on your 5-minute chart. Okay. What I mean by observe, check. Is it moving sideways? Is it trending? Is it moving down? What is it? So the overall conditions over here, just ignore this. Let's assume that we were watching S&P 500 and we were in this point over here. We're seeing that it's down, bouncing down, reversing. So it is moving sideways for a few sessions. So we have this first clue that is moving sideways. It's in is ranging. It's in consolidation. So that's the very first clue. So if the asset is ranging, moving sideways, sorry, you need to ask yourself, okay, so if it's moving sideways, then where are my immediate support and resistance areas? So your immediate support and resistance areas lie on the edge of the range, right? So this, which has been retested several times, is your immediate resistance area, and the very bottom, it's your immediate support area. Simply because it has been retested several times, and also because we have seen some indecision every time that the asset was close to these areas. So you see, if you closely checked, you can see that we had some doji candles every time that it breached this top, or some doji candles or long tail candles every time it breached this bottom. So indecision. Okay, so and every time that there is indecision, the price tends to move away. If you identify indecision in support or resistance area, then that implies that the asset will move away again. Okay, this is really common in trading, that if the asset is close to an immediate support or resistance level and you have identified candles, doji candles, or small body candles with large tails, etc., that present indecision, then that implies that it will try to move away again. It's a reversal. It's a reversal signal. So in general, you should know that a reversal trade includes 3 parts. Okay, includes what it includes. Firstly, you have a preceding trend. Then you have the clue of an indecision on support or resistance level, and then eventually the reversal of the trend. You can say, okay, Andrea, but where have you seen these three parts in this case? Yeah, I've seen it because I was going down, 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 down. Okay, so that's an immediate, that's a short-term downtrend. Once it came like close to the support level, we had these weird candles, doji candles, long length candles with small body. So we have this is indecision close to the support level, and then eventually a reversal. The same stands for this area over here. So indecision, can you see these doji candles? Indecision close to the resistance area. We had previous a trend, so a preceding trend. So eventually we end up with a reversal. So these 3 parts, it's something common, it's something you can see. These 3 parts is something that you can see in every reversal trade. So you see, presetting trend down, indecision at the support level, reversal, and so on and so forth. Okay. So, so you need to ask yourself, what's going on? I mean, for every single candlestick that you're seeing, you need to check the length of it, the tails, in order to identify whether the reversal is about to start, whether the preceding trend has reached to its end, whether it's consolidating, and so on and so forth. So every move reacts as actually every candle give us some hints in regards to the next possible movement. Okay, but you need to be very, very careful. So, oops, what happened? Oh, here we are. So have in mind that indecision on either the support or resistance area implies to a sign of reversal. So let's move on. That's another example, and this is not how, this is an example in order to take your entry as well. So check this out. The asset was initially in this area over here. It dipped down, found the support over here, reversed, right? Retested that high again, which now turned into our resistance level because it was retested again. Okay, so we have, and we can see that it came back, it rebounded, and came back to this resistance area, and now it's giving us indecision signs. So it's it's on the resistance area, and these doji candles, actually we had 1, 2, 3, 4 in this case, 4 candles, doji candles, which they imply indecision, right? So this was the very first hint that it might turn down again, but instead the next candle, this candle came after the 4 consecutive doji ones. You see this one, you see this big one, a nearly full body candle, strong one, bullish, which change the trade conditions that we have seen so far. This bullish candle indicated that even though so far there has been an indecision and there has been a reversal signal, potential reversal signal, instead the asset found further momentum and is pushing higher. So the exactly next candle came to confirm that this consolidation has ended and a trend to the upwards is developing. Okay, so that was a possible entry signal because of these two bullish candles that actually managed to close above the resistance area. Okay, because we had the indecision, so that was a sign of a reversal back lower, but these two came afterwards and they indicated the bullish momentum. So now, what I'm saying over here, I'm saying not an entry point. Actually, it is an entry point if we have seen these consecutive candles and we have opened a position over here. Now, if you missed that though, if you have missed this entry over here, then you should hold and wait to see whether this resistance will now turn into support. Okay, so if you miss an entry, don't chase it. So what is going on over here now? Afterwards, we've seen 1, 2, 3, again, doji candles. So this means that there is indecision, but this time above the resistance area. So this is a sign that our resistance level, it has now turned into support level. Okay, a support level. So what we said that indecision close to support or resistance level tends to signal a reversal signal, right? A reversal signal. So in this case, we have indecision on the support level. This has now turned into support. So indecision on the support level implies to a rebound, implies to an upwards movement, which is indeed what happened. Okay, now another possible entry is that one. Even if you missed that, another possible entry is this one. Why? Rallied, but for 1, 2, 3 consecutive sessions, struggle to break that area over here, and instead it turned down with this strong bearish candle. So this area is now our resistance area, right? We had doji candles over here, which imply to indecision, and we have a pullback. So that was an entry point to the downside, a selling position, potential selling position, okay? And since we already observed previously this level, which it was resistance, it has turned into support, this could also used as a target area on this short position, okay? If you're not following me, let me know, okay, in order to repeat stuff. So, another example, which actually, okay, has FI on and volume, so ignore it because we should focus only on the price action. But so this is a 30 minutes chart, right? Sideways, sideways, sideways. So this is our support area. This is our resistance area. Breakdown of the support area implies to bearish signal. So it's not a great, so I'm gonna skip it and go to the next one. So now, I'm lost. Emmanuel is saying, have you been here from the very beginning, dear Emmanuel, or you have just entered? Because I don't think I have. I didn't fully understand the last example. You're referring to this one, right? Yes, no, this one, yes, no. Yes, okay. Emmanuel, that's a yes because you have just entered or because you have been from the beginning. If you just enter, there will be the recording anyway. So, okay, let me do this again. Okay, so I'm gonna take it step by step. Focus on this part over here. Let's assume that you're checking your charts. You're checking your I was having network challenge. Okay, no worries, Godwig. Okay, Emmanuel, I'm gonna do it quickly again. So let's focus on this one. Let's assume that you have seen an asset that is moving like that. Okay. So ignore the rest. Okay, let's focus to that one. Based on what you're seeing, you have identified this as the immediate support level simply because it was the latest low, right? And this as the immediate resistance area because it has been retested 1, 2, 3 times and etc. Okay, right? So we said that every time that the asset presents indecision close to support or close to resistance area, that's a clue for reversal, right? So we have like very, very roughly identified these as our immediate support levels. And we were like waiting patiently to see how this will develop. So what we are seeing is that on this resistance area, we have 1, 2, 3, 4 doji candles. So let's not forget that doji candles present indecision, right? So we have what we have here, indecision close to resistance area, which means reversal, right? So that's a clue that it might go down, right? Okay, but it was a clue, but we were patiently waiting for a bearish candle, right? In order to confirm to us that indeed it will turn back down again. But instead, the asset provided a bullish candle and a strong one, which actually broken our resistance area. So what's now? Now is a bit of you need to be a bit patient and to check whether the asset will actually present further bullish signals. And indeed, in the very next session, we had another bullish candle. So that was that was a good entry to enter long because why? Because it has broken the resistance level. So that was an indication that this consolidation has run out of steam and a trend is developing. But even if you miss this kind of signals, guys, if you miss this kind of possible entries, that's fine. That's fine because what you have to do if you have missed something like that, if you have missed an entry over here, you just need to be patient to see how it will develop because there will be more entry points for you in the future. So what I mean by that, so even if let's assume that you have missed that. Okay, so you keep observing the asset, right? And you have seen that after these two bullish candles, we had a more doji ones, right? 1, 2, 3, and they all have been like close to the low area was pretty much similar. So what that means? This means, so these consecutive 3 doji candles pretty much at the same area present that now this resistance area has turned into a nice floor, has turned into a support area. Okay, because you see, because the lows are like consecutive and there wasn't really a close below that. It was so if it looks like it has found some kind of a support, a floor. So that is another clue that this is now a new support and the asset might continue its rally. So Okay, this bullish candle came, and that was another entry point. So even if you missed that, you can see this over here. Why I'm saying this and not this? Because in this one, we had 3 doji candles, but the next one was a bullish one. So it was a bullish signal. But over here, we have seen the asset retesting this area over here and turning down sharply. So indecision in a resistance area implies to reversal. Here is the reversal. So that's a nice level to enter short with target area, your previous support level. Are you with me? Okay. Perfect. So we can move on to the next example. So Ligeda, hello, can you please explain during the question and answer session what the Y values on the RSI indicator means and how we can correlate it with? Okay, Ligeda, once we are done with the webinar, I'm gonna leave it for the very last thing to do. So yeah, so as I mentioned, price action also since it has to price action in the it's the observation of the price movement. Like we can actually identify some patterns, some candlestick patterns by observing the price action, right? So remember, before we had identify our support and resistance level because the asset was really based on the highs and the lows of the asset. It was pretty much consolidating initially. So by the way, you can use trend lines if you find it easier for you. That's actually much easier. So you can draw the support and the resistance lines, the support and resistance levels that you have identified with from your observation. You can put a trend line on in order to remember, in order to be easier for you to identify a breakout, an entry level, etc. So in this case, what we have over here, so we were like monitoring the market, right? And we had seen that it's repeatedly retesting these highs over here. So we have put a straight line on because this is what? What is this? Can anyone reply what that is? Since we have seen we have observed, by observing the price action, we have noticed that it's retesting again and again this area. So what that means? It means that this is our resistance level. Exactly. Thank you. Oh, good. Thanks. You all replied correctly. That's good. Perfect. Now, observing the lows and by connecting the lows with the trend line, it gives us support level, right? Support trend lines. So by connecting the lows. So what we have over here, by accident, okay, by putting on with a trend line our support and resistance levels, we have seen that it looks like an ascending triangle, right? So this ascending triangle, which is actually has been made based on our observation and the connection of the identification of support and resistance level, identify an entry. Because if you have observed a triangle, either an ascending or a descending one, etc., that means that the asset is moving within the area of the triangle, right? So as soon as the asset, as soon as the price goes away, goes out of the triangle, that's an indication for you guys. That's an entry point for you. What I mean, as soon as you see the price action, the candle breaking the triangle, that's an indication. So like in this example in which we have identified the ascending triangle, you can patiently waiting for a breakout, because a breakout indicates that either bulls or bears have gained momentum. So in this case, it indicated that the bulls have attempted a breakout and have gained momentum. Why I said bulls? Because we have seen the breakout to the upside. So here was the breakout. Can you see? So it was moving within the area, and eventually broken it over here. So that was the breakout point, because it broken it to the upside. It means that as I said, the bulls have attempted a breakout and they have gained momentum. So that's a bullish signal, right? You can either wait for confirmation by the very next candle, the very next 1 or 2 candles, the max, or you can take the entry, okay? But now what? The key question is, okay, I have taken the entry, but where shall I set my stop loss and where shall I set my target area? And that can be done with a very easy way. Since you have identified an ascending triangle, the base of the triangle, okay, so the distance from the beginning, the very beginning, the distance, this distance over here, okay, could give you a possible target level. So by measuring this distance, you can use the same distance in order to set your target. Okay? It's a very common technique that the price action traders, if they observe a triangle, they use the base range in order to identify their target level. Okay? Now, in regards to the stop loss, okay, stop loss can be used, can be identified based on your risk and reward ratio. So for example, if the target which has been identified using the base range, if it's, that should be around 550, so this is around 50 pips. So if for example, in this example, there are 50 pips distance. So if your risk and reward is 1 to 2, then your stop loss will be 25 points below the entry point. That's one way to do it. Another way to do it is you can use the latest low as your stop loss. Or another way to do it is to use a trailing stop. Or another way to do it is to use this trend line, the previous resistance area as your stop loss, or just a few pips below it as well. So it depends. Okay, there are a lot of exit levels, exit strategies that you can follow. And I think we have actually webinars on that, so you can have a look afterwards. So this is another example with several entry and exit points, etc. So let's start with that one. That looks very, very similar to the consolidation that we have seen earlier, but there is a nice pattern over here. So it moved up, okay, copy that. It went down, went up again, higher high, went down to the same level as before. That's why I put this trend line, because I noticed that it has retested this line 3 times so far. Went up again, retested this area, didn't breach that one, so and that doesn't look a bit like a Head and Shoulders, and this is a headline. So by this observation, I know that is pretty much consolidating, even though the resistance it's a big, so even though we have this support, this resistance, and we've seen higher higher highs in the middle. But it looks like a head and shoulders. So I have this in mind. I have put a note on that, and I'm waiting patiently to see what else will happen. So I've seen that it has drifted down, retested my support level, but also broken it slightly and turned up again. So my idea of a head and shoulder, it has rejected because it didn't move down. I didn't have a confirmation of a further dip. Okay, so that's done. I'm gonna clear that. It's just idea. It's just thoughts that I have when I'm observing the charts, guys. Okay, is what you need to ask yourself when you're actually monitoring your charts. Okay, so head and shoulders failed. I have put this as my trend, my support, immediate support level. I have put this as, or even higher, you could put all these as your resistance area. Okay. And I'm patiently waiting. I saw that it managed to broke my support and posted a new support. Okay. But in all this like observation, there were a lot of possible entry points. Why? Because as I mentioned, number one principle of price action trading is that if you see indecision close to support or resistance area, that's a reversal signal. So that was a possible entry, that was a possible entry, that was a possible entry, that was a possible entry. Why? Doji candle in my support area that has been set up because of these two consecutive lows. Up. Indecision again, but in this time in the resistance area. And you can tell me, but Andrea, there is no doji candle here. Yeah, there's no doji candle, but there are 4 consecutive ups and downs, pretty much with the same length, but different direction. And I mean, it might not be a doji, but you can see that it went up, it turned again quickly down, reversed all the losses gains, then again up, then again down. So these consecutive 4 candles that they look that there is not a clear sign whether it will they will go up or will go down. That was an indecision. It doesn't necessarily means that you have to see a doji candle. You might see consecutive candles with different direction but the same length. Okay. So that was another sign that it will revert. What else? So, okay, another sign over here. Dip down, quickly turn up, move sideways with some like a this doji candle, but sideways. You can see that it fails to breach again the support level. It found some kind of a floor. So these consecutive 2 candles were indication that bulls are trying to gain the control again. So that was another entry with over here, to be more precise, on the closing of this candle over here, because we had 2 consecutive bullish candles away from the support level, from both support levels. So that was a bullish sign with target our previous resistance area. Okay. Again, something that is similar with the previous example that I showed. We have seen this reversal, so it's now consolidating and retesting our resistance area until it managed to break it over here. Not sure whether it will continue up or whether it will turn back down like what happened over here. Then wait for further confirmation. So this further confirmation came with this candle, the very next candle, which posted another higher high. So this resistance is now at our support level, right? With targets. Okay, there are many ways to the target. One way is to identify the previous high levels. The previous high levels were up here. Okay, so with this current trend, which support is main and which is immediate support with this current trend. You mean this current trend here? So here we have a lot of consolidation. You see that? So sideways, sideways, close to the resistance area. We had a lot of volatility over here, which boosted the asset down and up, and then turned it quickly down. But it's still consolidation because these huge candles. It means that something happened that time, maybe news or something that they added a lot of volatility, but they haven't really cleared the direction of the asset. So what you need to do in this case, this is an immediate support level because it was 1, 2, 3 candles at the same level. And this is actually, this is one resistance level. This is a second resistance level. So we need to be patient and wait to see whether it will break that level or whether it will eventually turn higher. So if we break that immediate support level, then the next target could be our previous resistance level. Now, if it's continue moving sideways and eventually break that resistance level, then the target level could be this one. So it depends. It depends. So this is things that you need to. You need to stick. You need to keep observing the asset until this mess is like clear. It exits the consolidation mode, and it provides you some kind of a clear signals. Is that fine, Daniel? Have I replied to your question? Another example. Gold. By observing gold, I have put one line over here. Why is that? Because I noticed that it has retested in the past this level several times before breaking it. So I've put a trend line on just for future reference because this might be potentially something that I will need. Then down, consolidating, and there was some kind of a floor over here, which broken eventually and turned into resistance. So it was support eventually and then turned into resistance, right? Support, now turn into resistance. And you see how the support levels could shift to resistance and how the resistance level could shift into support levels. That's why if you identify support or resistance level, you need to put it on, to put your lines on for the future. What's yeah, that's gold. Yeah, the title is wrong. This is gold for our chart. So okay, we just focus on the latest example. So consolidation, we have put the resistance line on, we have put the support line on, and you can either decide to trade on these reversal points or wait for any breakout either to the upside or to the downside, a breakout of this area over here, okay, this over here. What else remains? This is an extreme move example. So in these cases, you should be a bit patient, wait until the market calms down a bit. But what I can see over here is that I have one support level, it's this one, okay? And another support level is somewhere here or here. So put my lines on and wait, okay? Because after an extreme move, we need to wait a bit for the market to calm down or like settled. Just put your lines on and keep observing, okay? There's no rush. We have seen that before. So that's pretty much a complete commentary on the previous example, on how you could use this entry, this as an entry with stop loss just few pips above the latest high and target level either based on your risk and reward ratio, or simply by using the previous resistance or support level as your target area. So that's one scenario, okay? Is this clear? So that's the have initially see. So the entry point was on the breakout of this latest low over here. Stop loss slightly above the latest high. So slightly above the resistance area. Target either based on the risk and reward ratio, or it could be further down at this area over here, which was our support area. So it can be used as a target as well, and so on and so forth. So, yeah, that was it's clear, guys. Before I move on, because we're actually done pretty much. So I want to make sure that all these examples that we have seen are really useful or not, or there is something that you cannot really understand. Your aim, if you are about to try yourself in the price action trading, your aim is to observe the body of the candles, the tails, their behavior. I mean, you see here, it's moving sideways. So that implies that this is a support level. Okay, there is an indecision. The fact that this candle is so big without any tail at the bottom and a very, very tiny tail at the top, this implies that bulls are in control. Now, this turned down after this indecision. This turned down with this candle that is a big one, okay, without any tail to the upside, means that now sellers are in control. So you need to observe your candles, but before doing that, you need to observe overall the market to see the conditions, whether it's moving sideways or not, and to identify your support and resistance levels, as I mentioned earlier, and then focus on the candles in order to identify the right timing to enter the market. I'm glad that it's useful. My problem is to know the exact place to draw my support and resistance level. Okay. Fair enough, Kato. Fair enough. So I'm gonna give you a live example, and I think you will be okay with it. Okay, so let's check. So let's move on. Okay. So let me clear a bit all this mess. I don't want any indicators at all. Come on. Okay. Okay, so let's zoom in a bit. Okay, so what I have focused to euros just randomly, 1 hour chart. Okay, what I see. Okay, what I see. So we had a low over here. Slowly looks that it's like moving high, right? So I'm gonna connect my lows, right? So that looks good. Now the highs, they used to be like a straight line, but that's not the case anymore, because you can see that it moved slightly higher and slightly higher. So I'm going to connect my highs right now. So it should be somewhere here. Okay, fair enough. I don't have a triangle, but this looks to be like some kind of a, actually I need to be precise. Remember, okay, connecting the tops, etc. Okay, what I have over here, I don't have a triangle, but I try to connect my highs and my lows, so that gives me something like, looks like a channel to the upside. But what you need to do right now, so you can see that, okay, it rebounded. So that's our support line level for now. And that looks to be our resistance line, okay, which is been retested right now. So it's retesting it. Okay, so what I need to do right now, wait a bit. Why? Because I can see that it retested, but quickly turned down. Then try to retest it again. Okay, didn't manage. I have a slight further boost to the upside, but I don't have a clear breakout of this area. Okay, so I've put my lines and I need to wait. Okay, I need to wait. Okay. Okay, I'm gonna speak like we're gonna do it a bit. We're gonna do scenarios because obviously we cannot really wait until we have a clue because we're in the middle of a webinar. Okay, but if at some point the asset close significantly above this resistance level that I have put, that would be so we need a closure of the candle above that level, above this resistance level. That would be the very first clue that consolidation might ended and we might have a bullish line. But if that doesn't happen, and instead we have a candle that it needs to close, that we will close below our latest low, okay, then so we need a bearish candle, but with a closure, not a retest, a closure, confirmed closure below that level, because below the latest low, then that will be an indication that it could turn back down again to retest our support level. So is it clear? So for now, what we are seeing is indecision close to the resistance area. We had these candles, which were a bit big ones, but if you see they have the same length, opposite direction, so I don't have a direction over here. Obviously, I have like a sideways movement, right? With these three. I had a bullish direction with this candle, but it wasn't strong. It didn't manage to break, to provide like a strong feeling that an upwards trend has started to develop, to have started or something. It's a small body candle with it's pretty small. So the small candles are not giving us like confidence. So that's the question that you need to do yourself in order to identify a potential entry. So what we need to do right now is just being patient. We have put the trend lines on, we move on to something else, to observe something else until we have a clear sign over here. Okay, it's not easy to find an example right now, but that was a good example. If I just delete everything again. Okay. So just ignore the indicators, but have you seen that? So what you need to do, dear Godwin, is just observe. Put on your lines, your support and resistance lines over here. I'll put this one. Actually, let me make it yellow. Why I put that one? Because it was the low one, the latest one. So I put that straight line. I'm gonna put another one over here. Okay, so support resistance level, it broken. So that's a sign of a potential rally. But why is not a sign for an entry yet? Because we're seeing it, broken it, so it exits this consolidation. We have a breakout indeed, but it turned quickly lower. Can you see that after this strong bullish candle, a bearish followed? So now this resistance is now looking that it has turned to support. But we need indication, right? We need confirmation, because what we have over here is like consolidation again. So with the same, they're testing this 135.32 area for 1, 2, 3 hours, consecutive hours. So what we need right now, we have the clue. We have the clue that this resistance has now turned to support. And this is our immediate resistance level. So if that breaks, then that would be a possible entry point, bullish entry position with targets either here, which is our previous resistance level, and stop loss, potential stop loss, just slightly below our support level. So we could put it like in these latest lows, or based on our risk and reward ratio, or based on our yeah, whatever we want actually. Okay, is that clear? If it is, I'm gonna call it a date, because pretty much we have covered everything. Okay, we have covered target, stop loss, risk and reward ratio. We can be used as for identifying your stop loss and your target. You have seen several examples. I have more in this webinar as well. I have more, so feel free to spend some time and check these ones as well. So don't forget that wicks on resistance imply to indecision, so that is a hint for reversal. The body of the candle, how big it is, and whether there is a tail below or a tail to the upside, give us indication of whether there are the bulls are in control. Okay, don't forget that. Yeah, so I have many examples here that you can spend some time to check yourself in order to understand how price action trading works. So I haven't forget you, Ligeda. So Ligeda is asking something about RSI, which is not on today's, we haven't really, today's webinar wasn't about RSI, but let me just quickly reply to her. So RSI, so let me find an example. Okay, so here I have, okay. Here I have RSI. You ask me what the handout and downloaded. Okay, download. Okay, I'm gonna send you a WeTransfer link in order to download it. So let me reply to Ligeta first. So you ask me about RSI. By the way, we have a webinar, past webinar for RSI. So if you have time, visit our past webinar website and watch that webinar as well. So RSI. So RSI, on the left-hand side, on the y-axis, as you mentioned, we have the 30 level pointed, the 70 level pointed, and is from 0 to 100. So what that means, these lines that you can see over here are the barriers that help us identify whether the asset is overbought or oversold. Okay, so what that means, that it means that if the asset breaches and breaks the 70 level, is in an overbought situation. If the asset is below 30, okay, which is the case, let me check whether we have an oversold example. No, we don't. Oh, here it is. So it has breached and broken the 30 level. So it means that it's in an oversold condition. Remember, every extreme condition implies to a potential correction. So every extreme position needs a correction. That's why I've seen it turning higher again. So in order to exit the oversold condition. So this is what these barriers are, to help you identify when the market is oversold or overbought. So the cross above 70, it's a bullish sign. But as soon as you see a turn back lower, that seems that the bullish momentum has run out of steam. Also, it's good. I used to have a 50 line over here because this is a cross above 50 is also a bullish sign. A cross below 50, confirmed cross below 50, with the asset pointing further to the downside, is a bearish signal. Okay, but this is another topic, and I don't have the time to go in deep right now. I would really recommend you to visit either our YouTube channel or go to our main page on the webinars page, on the past webinar page, and search for the RSI indicator webinar, and spend some time to see that recording. Okay, so I haven't forget you in the regards to the PDF. I'm gonna send it to you right now. Just give me a second. Where is it? The price action. Okay, get the link. So I'm gonna send you a link right now. Dennis, those tools, PTT, how can I get the question? Maybe off topic. Dennis, are you referring to the people points? I said several times in the past, because many people find people points pretty awesome, myself as well. So it's a premium tools indicator. What that's supposed to mean? It means that we offer it for free, so don't worry about it. But you need to meet some criteria. So what you need to do is go to the website, okay, Hot Forex website. You're referring to pivot points, if I understood correctly. Yes, you should. So go to the tools. So open the website, click tools, click premium traders tools, okay. And so go at the very bottom. Here it is, MT4 and MT5 indicator package. Click learn more. And over here there's a download button. Click download. You need to log into your HF area though. And as I said, you need to meet the criteria in order to be able to download them. I'm not sure what's the criteria. Actually, the criteria is just a balance. You need to have a minimum balance in your account. You don't need to pay for them, but you need to have like a minimum balance on your account in order to be able to download them. Yeah, but that's pretty much it. That's the way, okay? So what else? I think we reached to the end of our webinar. Okay, so Dennis is asking, what's the difference between support and resistance and demand and supply? So, so that's a good question. So don't forget that actually it's the same thing, which pretty much, but let me clarify what I mean. Supply and demand. So okay, how can I the support and resistance level, first of all, is the levels where traders have seen a lot of failed attempts at which price cannot surpass, right? Supply and demand is a much deeper zone, which represents key price levels of broad support and resistance levels. Okay, so supply and demand and support and resistance, it pretty much is the same thing, but supply and demand represent the broad price region, okay, while support and resistance it's defined by some key price levels that the market has not managed to overcome. Okay. Increase my audio. I had it already increased. So that was the end, actually, guys. We are done. We have covered everything. So if there are any further questions that you might need help with, don't hesitate to contact me at webinars@hotforex.com. It's me, Stuart, and our support team that replies to those emails. So if you have anything if you have any questions, feel free to send us a request, and we reply within 24 hours anyway. Okay. So that was the end. Hope you have enjoyed. Hope you find it interesting. If you're struggling with it, just give us a screenshot. Say I have done this, and this. What went wrong? And send us an email. That would be brilliant. Actually, we manage to help you if we can see your example, your screenshot, etc. Okay. So I have sent you the link, by the way, in order to the link that I have sent to all of you. It's a WeTransfer link, so you can download the PDF from the link since it's not working. And that's it. So I'm gonna end the session. Hope you're having a great day ahead, and we're gonna see you again next week. Okay, guys? See you. Bye-bye.